Bring that ass back like a boom, 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 boom.
Hello everyone, happy Easter to those of you that are celebrating, and we're doing our weekly review. I'm Supernova and you're with Boom Traders week 15 2022. As usual, we're going to first do the session overview so you know what to expect. We're going to start with the risk fast model first, tactical trading environment comes second, current markets, and then do a quick summary of the overview. The first thing that it's important to note, we did have this buy signal here on 21st of March this year, but since then we've gone to negative environment again, and as you can see the general market, we still have it as neutral because it still hasn't broken down yet. Up down volumes neutral, new highs, new lows move to negative, and stock participation is on neutral. As far as our trading environment goes, we still have the signal on yellow, but it's a borderline decision between moving it to red, where breakouts will not be working. So far, quite honestly, we have some positions that are holding up well. We actually took profits in some of them, and we only have, I think, like 2 positions that are in the red right now. So it's not something completely disastrous. However, we've seen the weakness to conclude the week in most of the indices, and it's really important to see how next week will show up in terms of the market. So far this is our tactical trading environment, and then we're going to move into the current markets and look at some of the important things that we look pretty much every week at. But first I want to start with a few notes that we have for this week, and these are the things that we are looking very closely, and they can set up how the market will react for in the next couple of weeks. So let's go into the current markets and start with the notes. These are a couple of things that we are looking at, and as I said, they can set the tone for the next couple of weeks, months, even a year. And first important thing to monitor is the 3-month and the 10-year curve inverting. If it inverts, that's basically a signal many people are watching for, and it will definitely pose a threat to the market. Now we're still far off it, and I actually have the charts right here. So this is a comparison. This is the other comparison that most people are watching. This is a 10-year minus the 2-year. As you see right here at the bottom, it inverted for just a couple of days and then shoot back up. And this is the 10-year minus the 3-month. Now this has been going up, so there is really no risk of inversion right now, but this is something to keep an eye on, because if it does invert, it's definitely a signal that there is more downturn for the market. The second issue that we're monitoring closely is the inflation rising at an accelerated pace. Now, there is some inflation. In fact, some people, some analysts have actually said that inflation is coming down, commodity prices are coming down. We're seeing this with oil. Some people that are in the used auto parts, used cars, dealerships mentioned that they might be seeing some reduction in prices. However, this is still not the case, so this is still a concern, and some of the Fed members, even the most dovish ones, expressed their opinion that we are far behind on inflation and we need to actually take more firm measures. So we'll see how this one goes. The third issue is, and it's basically a signal that we might be getting more bearish, is major slowdown in earnings. So far so good, but the next earnings cycle is coming fast towards us, and we'll see how it goes there. And last but not least, this is a major geopolitical issue, escalation of the war between Russia and Ukraine to a NATO country, and we've seen firm signals from NATO and the United States that if a NATO member is attacked by any means, NATO will respond, and that will definitely bring more uncertainty to the market. So this is what we have for notes. Now we're going to take a look at the indices, some market internals, and move on to with the next topics. Now let's begin our talk with the indices, and what you see right here is the daily chart of the S&P 500. Pretty much all the major indices look the same. As you can see right here, since the beginning of the year, so this dotted vertical line is the beginning of the year. Since the beginning of the year, we've been in a downtrend. We had a spike up from these lows on elevated bullish volume. But we were rejected testing the highs right around here, and now we are definitely going down again. S&P 500 tried to oscillate around the 50-day moving average. Now we are firmly closing on the lows with elevated volume in this sell-off, so I'm definitely thinking more down volume, more down movement is expected. Now you can try to get some targets in terms of Fibonacci retracements, and we see that we are right below the 50, 61, 61.8 retracement coming at 433, but to me it seems more than likely that we're gonna undercut this and go actually below the recent lows. If you do some Fibonacci extensions on the other side, and if you take this this pivot right here and you project it from this high, you're looking at a range of about 402, which coincides with the lows right here. So basically you can see that we are right around here for our projection. Now of course this is just a part of the analysis. We need to see some volume coming in order to be thinking about further move downwards. Now I just want to show you also the internals of the S&P 500 here on TradeStation. As you can see, this is basically the S&P 500 on top, and we have the advanced decline line. It tried to rally a little bit right here, but definitely in a downtrend. You can see in even the advanced decline line even foretell this fall. As you can see from here, let me just grab my trend to see right around here we've been in a downtrend. There have been some divergence from the price, so price has been going up, and now it's starting to play along with the advanced decline line. Now one positive note here is the net new highs, net new lows on NICEP. We saw even on Friday with this drop, we recorded more new highs. These were 32 compared to 14 net lows. So definitely looking bearish to me. The net new highs, net new lows are somehow supporting bullish view or some exhaustion view, but we still don't have that higher put-call ratio to be talking about exhaustion to the downside. And we're definitely looking for some more bearish momentum, especially with this volume. As you can see in the last, as you can see here, in the last couple of days, we had like 1, 2, 3, 4, 5, 6 out of 8 days we've had negative volume, so definitely looking bearish. Now let's move to the QQQ. This is definitely looking even worse than S&P 500. Charts are very similar, but this is looking worse in terms that S&P 500 at least was oscillating around the 50-day moving average. This is definitely going below. As you can see right here, we had a gap low, and since then the 50-day moving average has been acting as support, with this candle almost engulfing all previous 3 days of action, volume higher. So definitely looking to go lower. If you do the same, analysis with the Fibonacci extension, and you take it from this high or even this high, it's not going to be much of a difference. So I'm just going to do it here. So if you do it from this high to the most recent down movement, we're talking about 303, which is lower than the 316 low right here. But the 78.6 extension falls right. We need within those lows right here and those lows right here. So this is an obvious place where we can look for some support. There are no moving averages to hold this anymore. Now let's just move to the internals for the QQQ. Again, doing it on TradeStation because it's easier with the analysis of the advanced decline line. Advanced decline line has been on a steady decline, same as the S&P 500. All the way, see, we cannot really break this trend line. We tried here, we fell back again. And if you draw a horizontal line right here, you can see that we are closing on it, and that horizontal line was, in terms of the advanced decline, was achieved when price was around 317 on the QQQ. So definitely more place to go downside. At least this is what the advanced decline is suggesting. Net new highs, new lows. You can see all the way since what is it? This is the 17th of November last year. We haven't had net new highs higher. Well, actually, maybe here there was 9, 16, yeah, 2 days here, and I think 1 day right here, 4 to 4, 4:15. Yeah, just a couple of days right here. So maybe no more than 10 days for about 4 months of trading now. So Nasdaq's definitely looking very weak and very toppy. Let's take a look at IWM. Same thing. I was talking about IWM the other day. We basically tried to break this trend. We formed this trend, and it would have been a good thing if we were able to break it. But unfortunately we're not. So this is like a channel action right here. You can see it clearly. We broke below it now, and we're definitely oscillating below it. We can't really close above it. Again, the 50-day moving average, the yellow line, in this case is acting as resistance. Volume still not coming in here though. There was some volume from the rejection of this upper channel line right here. Volume still not supporting this move down. The last one on Friday, the last candle right here on Friday, volume was elevated right till the next to the 20-day moving average on the volume. However, you can see that we made little progress compared to the candle of the prior day, and the candle prior day was on lower bullish volume, so it's suggesting minor strength in the Russell index. And now let's just look at the internals for the Russell on TradeStation. And looking at the internals, you can see advanced decline line is still in a downtrend, which definitely is a convergence between the advanced decline and the price action. Let's just draw this channel. As you can see, it's going definitely downwards, whereas price here, you can see it's actually moving a little bit upwards, and we are in this channel. So we have some divergence here between advanced decline, between the price, and also net new highs, new lows. As you can see right here, the net new highs are starting to rise, net new lows are going downwards. So there's some subtle, I would say, strength in the IWM, the small caps, and usually when small caps are strong, the market is strong. So I'm definitely very curious to see how this one goes. Last but not least, let's look at the Dow Jones Industrial, and it's above the 50. So this is definitely the strongest of the four major indices. It's above the 50. And as you can see, the 200-day moving average, the purple line right here, acted as resistance a couple of times. We were able to close above it once, then indecision candle, and now we're going back down. However, same thing as with the IWM. Look at this huge bullish candle right here on low volume, and then we have elevated volume on this reversal bar, but the reversal bar did not even get to the midpoint of the previous candle. So a lot of volume, but not much progress made from the bears. Probably the 50-day moving average is now acting as a final straw of support right here. So it's up to see how this develops. In terms of advanced decline line for the Dow Jones Industrial, let's look at TradeStation. I don't usually do the net new highs, new lows on the Dow Jones Industrial because there's only 30 stocks or so, and it doesn't really make any difference. I mean, rarely you will see a stock making new 50-day high or 50-day low, so no point looking at this. However, the advanced decline line is definitely the most stable of them all. You can definitely draw something like a channel right here. You can see we're respecting with some movements above. But if you draw the trend line from the bottom right here to the top, you can see that we are supporting this in terms of the Dow Jones. price action is supporting this trend line. Now we've broken this downward trend line. Let me draw that for you too, so you can see what I'm talking about. We've broken this and now we're staying above it, and then we have another one that is forming right here. If we can break this little handle, if you think about this as a cup and a handle pattern, if we can break this on strength, then we might be looking to test the 355 and then going all the way to 365. Industrials are definitely looking stronger, and if you've been playing some of the stocks recently, you can see some of the bigger industrials. That's deer, so it's trying to break out new highs, and the other one that it's notable last week, CAD, huge move on Friday. So Dow Jones definitely looking stronger than the other indices. IWM, very interesting action. NASDAQ, complete trash. Definitely looking for lower lows. And the S&P 500 is held right around the 50-day moving average. So this is the main thing for the indices. Now let's take a look at some of the other instruments that are of interest to us and go in depth into the market internals.